Good morning, everyone. This is Brad Matheny. I wanted to create this video to highlight what's going on in the metals and miners sectors right now. And I'll tell you briefly what I believe is actually taking place. The elections, well, a number of things. We've had the Fed, the elections in the US, the global market concerns, renewed COVID concerns, and we now have this meltdown in cryptos and Bitcoin that is taking place all over the past 14 or so days. And it's created a real amount of fear. And I can explain it to you in simple terms. There's hundreds of billions of dollars that are out in various forms, invested in cryptos, altcoins, Bitcoin, and various other assets. And gold and silver have been really looked at as whatever. It's metals. There's no real interest. It's going down. Metals are not doing much. Now, ladies and gentlemen, metals have shifted. This is a daily GDXGA chart. You can see this huge shift with my TT charger system. We've now moved into bullish trending again. We've got a very solid breakout. If we take a look at this and I drag this downward, you'll see my lines where we're looking for a real solid upward breakout. We're just about near that big breakout. If we take a look at SILJ, it'll be very similar, I'll bet. Yep, we have the same type of scenario. We don't have the lines, but we've got the bullish trending. We're starting to see a very big breakout. Let's take a look at GLD. Big upward move. You can see off of this downward cycle trend, we've got a big solid breakout to the upside. Let's take a look at SLV. Huge breakout to the upside, big solid move. We come over here and I will try to show you my custom metals index. Here you can see this is moving strongly upward. I expect it to move back up into what I call the yellow brick road back up here, which would represent another 10-15% move for metals, possibly moving to new all-time highs. And I believe it's going to happen very quickly. The reason being, let me again explain it to you, is there's a real shift in where assets are being deployed right now. You've got the Fed trying to break inflation. You've got home prices deflating. You've got hard assets, general consumer goods deflating, for example, autos and other assets. You've got moderately high inflation. The traditional safe haven assets of gold, silver, platinum have been overlooked for more than a year. They've been sideways, flat, basing. I've been warning my followers that this looks like an extreme solid basing momentum, a basing pattern right over here, back over here near these COVID highs. You can see what happened here. We started to see this real rally prior to COVID. This was 2017, 18, 19. You can see COVID fluctuated. We then saw a huge spike. Then we saw the speculative bubble take place. The speculative bubble was the huge rally in Bitcoin, altcoins, real estate. Everybody focused their money on these huge speculative bubbles, and that has now deflated. As it deflated, everybody's hopes were that these speculative bubbles would start to reflate, but now they haven't. They've actually collapsed. And what's happened now is we're moving into a more traditional market aspect, which is that what traditional aspect of the market would be to move money into safe haven assets, gold, silver, treasuries, bonds, things that are going to essentially be immune from a 30, 40, 60% fluctuation. And I believe that's exactly what happened over the past couple of weeks. I believe the elections, the Fed, the collapse of the housing market, and particularly what's going on in cryptos has now shifted everyone's focus to metals, 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 metals. And I believe this could be a very solid upward trend. I do believe also that U.S. assets, even though the U.S. dollar is weakening a bit, I believe it's going to translate into the U.S. dollar holding up, believe it or not, holding up above 104, 105, possibly staying between like a 105 to 108 range over the next couple of months, as all of this capital at risk in altcoins and cryptos and what have you moves away from risk factors and tries to move into safety and security. And I believe that's going to be in physical metals, and I believe it's going to be in US-based assets. So there's going to be a big shift of risk on. What that means is a lot of the capital over in cryptos is going to move away. It's literally going to just abandon the crypto space, let it settle. Nobody wants to be involved in something that's going to unwind maybe 60, 70% further. May come back in a couple of years once everything settles. But the long and short of it, ladies and gentlemen, metals, miners, and commodities are poised for incredible moves to the upside. So be aware. Now, I was going to show you this chart here, which total crypto market cap. And you can see we've gone down to 7.8 billion. This has been fluctuating all morning long. It really is not a pretty chart. We take a look at it here on a daily basis. You can see that it's continued to move downward. We've gotten below these lows here. We've established new lows. I expect it to continue to move downward. There's two things that are really playing out here. Number one, how much are you willing to bleed is what a lot of people are asking themselves. And remember, not everyone really likes to bleed a lot. Even though you might be a big believer in what it is, this could be a very big fallout with what went on with FTX and the crypto space. And secondarily, we've had a tremendous move in the U.S. markets and in metals. And like I said, I believe what's happening is capital is moving into traditional safe havens and the strength of the U.S. dollar and the strength of the U.S. stock market, and moving away from these speculative bubbles. So we need to see how this plays out going forward. Now, I was also paying attention to this over this weekend. This is kind of interesting in the sense that it gives you market cap and it gives you global valuation in global volatility, over 24 hours is 30%. So understand that a 24-hour global volatility of the entire market is 30% over the last 24 hours. It was probably much higher over the past 4 or 5 days ago. But understand that we're really seeing some big meltdowns in a lot of these cryptocurrencies. 5, 6, this is just 1 day change here. So you're seeing 6% down in Dogecoin, 6.9% in Polygon, 5.4% in Shiba Inu, 6%, almost 5.7% in Solana. It's pretty ugly, ladies and gentlemen. And the question is, how much are you willing to bleed? Are you willing to put your, million or 100,000 or 200,000, even 10,000 in here and watch it drop 30% or more? And some of these are really, I don't know much about all of these different crypto coins. What I do know is that these numbers across the board selling like it is just not good. Not good at all. Some are going up. You have some that are still moving higher, obviously in speculation. But you're going to see a lot of these that are -9, -6, -8. And again, I think it's going to continue to unwind. I think we're going to see there's FTX, the culprit here. And you can see here, this is just collapsing. And again, this is going to unwind because a lot of these are all kind of interconnected. You're going to find that people that are involved in FTX might have assets over in other cryptos. So long and short of it, this could become a very big unwinding of capital. And again, remember, we're talking valuations here. We've lost almost 200 billion, little over $200 billion in the last 4 or 5 days in the crypto space. Again, it looks pretty ugly. Could it go down here to this area, losing another 40, 50%? Yep, it could. If this thing unwinds, you could see the total valuation of the crypto space back into the 200 to 240 billion range, which is still respectable. Don't get me wrong, but from way up here, close to 300 trillion. That would be about a 91% collapse in total valuation. And again, I did an article over here. My ideas right here. And this was just a couple of days ago, but it reminds me of the South Sea Trading Company. If you're not familiar with the South Sea Trading Company, check it out. It was an incredible story of Europe's elite starting a company around the shipping industry, hyping the industry, telling everyone about how great everything was, and they're going to be able to move assets around in ships, and it's incredible. We can buy spices and whatever overseas and sell it over here. You know, everything's going great until the real numbers came out. Everyone realized it was just a false narrative. It was just a bunch of lies. And when it finally collapsed, it collapsed to nothing. Hundreds and thousands of people were left penniless. There were a lot of people that were hunted down and killed because people were so angry. But the long and short of it, this whole thing just reminds me of all the great scams of the past. You know, this is different than Bernie Madoff in the sense that Bernie Madoff didn't create a false currency, and he just lied about what he was doing. He was running a true Ponzi scheme. This is the idea of, as others have talked about, the greater fool theory. It's great. You know, it reminds me of Beanie Babies. Literally, it reminds me of Beanie Babies because the idea was you're taking a 9-cent item, you're turning around and trying to say that it's worth a couple $100 because it's rare and you can't get it anymore. And everybody bought into the hype. And when the hype was going up and everybody was making money, everybody thought Beanie Baby, the craze would never end. Then suddenly it just ended. It just all of a sudden people realized that this is a 9-cent item. It's just a doll with a bunch of, beans in it. And there is no real value in it. There is no intrinsic value in an item that costs 9 cents to make, even though it's rare. I mean, there might be long-term some historic value, maybe 40, 50, 60 bucks, do you remember the day when these things were trading for $2,000? But this is what I see really is the massive unwinding here. Okay. This is the massive unwinding phase. And at this point, I see it just winding downward until some sort of a base level is reached. Now, where is that base level? I have no idea. Personally, it could be years from now. It could be many, many years until this entire industry settles, establishes some sort of an operational structure to protect investors. And I would warn everyone that, it's kind of like a sinking ship right now. We just don't know where the bottom is, how deep the rabbit hole goes, whether or not there's really any intrinsic value in any of these. Now, I will say certain DeFi coins that are backed by commodities or backed by hard assets like the US dollar, yeah, they may end up having some intrinsic value and they may survive this much more effectively. But in reality, all of these crazy coins and ape images and what have you, the reality is this is very similar to Beanie Babies, in my opinion. I've never really subscribed to it. I did get involved in Bitcoin a little bit way back in the day, back in 2015, 16, 17, and got out because I really didn't believe much in it, but I was willing to put a couple $100 into it and see what happened. But long and short of it, ladies and gentlemen, this is a big unwinding. And all of this capital, as I mentioned to you, when you get right into it, all of this capital, you're talking trillions of dollars, almost $3 trillion have been wiped out to 790 billion. It could be wiped out down into this 160, 170 billion. That would be a 92 to 93% wipeout in total market cap in the crypto space. So, and yeah, take a look at Beanie Babies. Look around on eBay and see what happened. Do a Google search and figure it out. This was a huge speculative wave that you can see started after COVID. This is COVID right here, and this is the speculative bubble that took place in the crypto space. It's it's very likely, I should say, that it's going to move from these levels down to below the COVID level, down into these areas, and attempt to find some support. So you're talking possibly going down to 50 billion, 100 billion, maybe 140 billion. So that would be another 80% from where we're at right now. Really quite ugly overall. So what I want to do is I want to leave you with this, is that money always seeks safety, security, and return on investment. Safety is in the form of a healthy, low-risk environment, okay? So money is always going to want to see something that's not very risky. Now, obviously, when things were going straight up, people's perception of risk was moderate. This is chasing the rally phase that happens in all speculative bubbles. The people were willing to take a risk because they thought there was no risk at all. It's just going straight up. Now risk is becoming much more visual. It's right in front of your face. So the safety issue is relatively gone right now. The security issue for capital always seeking safety, security, and ROI, security is being backed by something fairly tangible. Hard assets, real estate, company assets, assets in the ground, earnings like Amazon. Amazon's got a huge amount of hard assets, but also they've built a diversified structure of revenue and earnings. So the real reality is the asset value of Amazon is probably, 70% revenues and 25-30% hard assets, but the real revenue is a hard asset. People rely on Amazon, people shop at Amazon, people use their servers, people use their technology. So the long and short of it, it's become an entrenched kind of technology. And the same thing with other technology companies. Other companies that produce hard assets are commodities, chemicals, utilities. These are always in play because they're producing hard assets that have constant demand. For example, toothpaste, toilet paper, and underwear. These are always in demand because people need them. Over here in the crypto space, where is the hard asset? Where is the tangibles that everybody's going to want to consume? What is it? I don't know. I don't have an answer for that. To me, it's vaporware. It's just the hope that someone's going to pay more than what I paid for it. And then lastly, you have what's called ROI, which is the opportunity for returns. And of course, that right now looks very weak. So of the three components that capital always seeks, safety, security, and ROI, crypto space and Bitcoin have zero of these. There is no safety. There is no tangible asset. There is no tangible real revenue that we can talk about. And there obviously is no potential ROI looking at what's going forward with the unwinding of these big crypto collapses. So be very, very cautious. And remember, we are looking at a huge potential rally phase in metals and more traditional hard assets, which could be very, very interesting for traders right now. Because we could see, here's SLV. Take a look at SILJ. I just looked at it earlier. But when you take a look at this, this is a $10.64 stock right now on metals and miners. And if we take a look at weekly, we were up here at $18. So what do you have here? You have the potential for a, let's move it just above, if we were to get to new all-time highs. You have the potential for an 82% rally. And if we go to monthly and try to take a look at where we were longer term, 2014, we don't go back much further. You could see this move up above all-time highs, which should put it up in this $24 to $26 area. And that may be a 140% rally. So this gives you an idea that, here we have a potential of a fairly strong hard asset ETF backed by commodities, in theory, fractional commodities, that could be looking at a 70 to 100% rally over the next 12 months. on a simple basis that capital will move away from unhealthy environments and towards healthy environments. And I believe metals, miners, and U.S. stocks, particularly technology and hard asset stocks, raw commodity stocks, are going to do very well over the next couple months. So pay attention. We could see a very big unwinding, and this capital could shift very easily into raw commodities, U.S. assets, and metals miners. So there's your update for today. I really wish all you guys in the crypto space a lot of luck. I think you're going to need it. I don't like what's going on, but thank God I'm not really involved. So, it's gonna play out one way or the other. It just doesn't look good right now. All right, we'll talk to you soon.